I suspect and I forecast a major growth in liquidity across all asset classes, in particular further revival of offices, which have very interesting fundamentals and positive supply and demand dynamics, combined with a really constrained development pipeline. I expect more activity on industrial logistics. This has been a backbone of the Polish market over the last 4 or 5 years. Last year was slightly disappointing, but we see a return of investors, perhaps triggered by slightly adjusted pricing, as well as a development pipeline which is significantly smaller than in previous years. In terms of the risk profile, I expect more core plus and value-add players. Perhaps on the long income side, we'll have more core buyers which have proven over the last 12 months that they can compete on pricing and ticket size, and they can put in very competitive bids. In terms of jurisdictions, this will be more Central and Eastern Europe capital, which has proven to have a different mindset in terms of perceived risk as well as the understanding of the local markets. But I think the main theme will be the domestic capital, both in institutional form as well as private offices, in particular in Poland, where we've seen the volume double over last year in terms of money deployed by domestic investors, and it has in fact quadrupled over to 2023. So I expect this will be a major force that will be investing in the regional real estate in 2026. So we have seen roughly 1.4 billion of deals in 2025 in Poland, and there was a lot of supply on the market in recent months. The last quarter saw a few large deals being closed off. At the same time, the supply and demand dynamics, just like in the office sector, are positive, which in turn make the investors that have been on the sidelines look again at Poland. More activity in Western Europe also triggers movement of capital further east, and I expect this will be one of the key sectors in 2026. I do not see a major significant yield compression anywhere in major asset classes. I expect the pricing to continue to be stable, perhaps with the exception of long-term income, where again we have seen selected core buyers come in and be very aggressive and very bullish about such assets. In terms of pricing for core offices, I think there will be some movement there. Secondary markets in general, they will have to wait the turn. Potential, growth, ambition.